Hello and welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got quite a bit of economic data coming in today, and we got core durable goods orders, and it came in at negative 0.5%, was expected to be a positive 0.3%. Durable goods orders, that includes autos, came in at negative 4%, was expected to be negative 1.1%. So that pretty much threw a wet blanket on the overall equities, and then it was hurt even more by pending home sales. Now, if you remember, we had home sales come in at almost not quite a record number, but the biggest amount of home sales that we had seen in quite some time. And today we got pending home sales at 0.2%, but it was expected to be 1.1%. So that was another wet blanket that threw on the market, just continued to the downside right after the equities looked like they were getting a little bit of ground. That number came out and the overall market slumped again. Crude oil inventories, which is what we have here with /CL. With crude oil inventories, they came in at a build of 1.7 million barrels, and it was expected to be a drawdown of 2.1 million barrels. So a big surprise to the upside, more supply, less demand. It's going to affect crude oil, and as you can see, it's down on the day by just over 80 cents, trading at $42.11. The overall market in there not looking too good. Big topping pattern here. The overall market's just slumping quite dramatically in there. Now, keep in mind, when I talked about overall equities are slumping, that's going to be a flight to quality. And a flight to quality means people are pulling out of equities and going to put it into gold and things like gold and bonds. So gold pushing to the upside and benefiting from that, up almost $6 on the day, trading at $1,334 a troy ounce. On to the bonds, as you can see here, up almost a point on the day, /ZB, up 26 ticks, pushing higher. It was almost up a point earlier today. And again, flight to quality, money coming out of equities and into these bonds. This is the NASDAQ, really starting to look like we got a bit of a spinning top doji here. Could lead to bearish signs ahead. But NASDAQ's still up on the day, although it's well off its highs, up almost 30 points. But like I said, well off the highs. The economic data points really throwing a wet blanket on the equities. E-mini S&Ps /ES down 4 points on the day right now, as you can see, very near the lows of the day as we speak. They are really testing, really finding a nice bottom, as we'll see here on this chart right here. This is a triple bottom, so really finding a lot of support right there at the, what is this, the 2157.58 area. So that is showing quite a bit of support right now. It'll be interesting to see if the bears can push below that. We are really extended to the upside, as I showed you on some of those other charts in the equities, well above the value area highs. Just looks like to me the bulls are starting to lose a little bit of their steam, and the bears may start taking control here rather shortly. On to some earnings trades that I have done. And Apple came out. I was pretty bearish on Apple. I've been bearish on Apple for quite some time. It just doesn't, I don't see that they're really pushing out any new products. They did beat earnings, so that was a push to the upside. And they also came out and said that they were buying car karaoke and we're going to start selling some of those amateur karaoke style in the car music videos, if you will. So that also gave a little bit of euphoria to Apple. It is well off the highs. It was trading up at the in the 104 handle, and it continues as the day goes on to start selling off, as people might very well be taking profits. It kind of jumped up. Hopefully it will come down and cover this gap, because I was bearish in Apple, and I sold the July weeklies that expire on the 29th, and I did the same weeklies with all of these earnings trades, and sold the 100 calls for 55 cents. Like I said, I haven't gotten out of those yet. I'm going to be in basically management mode for this one. I'm going to try and decide whether or not I'm going to cover this trade today, or possibly roll it out either today or tomorrow for a little bit more duration, give me a little bit more time for it to come back down, collect some more credit, increase my break even, all of those things that I had done with like GoPro and Twitter. Hopefully it won't take me that long, like 6 months to get back to break even on something like this, but that's what we do. You know, I stay mechanical, and yes, I was wrong, but I'm in the corner, and I'm gonna be doing the rope-a-dope and fighting my way back out of it. So we'll see. I'll keep you posted. Then on to Boeing. Boeing also surprised to the upside. And Boeing, though I did a strangle, wasn't really sure what to expect from Boeing. I had seen that they had gotten another contract, so it looked like they were going to be doing okay. But in that, I just decided to take advantage of some volatility crush. Done a whole webinar on it. I don't have the time to go into it right now, but go to protraderstrategies.com. Volatility crush is one of the most important things to know when you're trading options. And despite the fact that it had low implied volatility, I talk about that in that volatility crush course, that how you can determine how much more volatility is going to come out of these options right after the binary event. So go to protraderstrategies.com. You can sign up for that. But in Boeing, I did the July weeklies again, sold the 128 puts and the 138 puts to create, or calls, sorry, 138 calls to create that strangle. And I sold it for 97 cents, bought it back this morning for 70 cents. I had to wait a little bit on this one to get out of it, because it was testing my 128 calls for the most part. I put a bid in there that once it came back below the 138 calls, and as soon as those went out of the money, I went to cover that, because I did not want to see those settle in the money. Then on to U.S. Steel. U.S. Steel, I was pretty bearish on. I didn't think that they were going to surprise the upside. They actually came out and beat earnings and gapped higher, as you can see here. U.S. Steel, ticker symbol X, up over $2, well outside the market maker move, which I think was expected to be about 80 or 90 cents in this one. So I went outside the market maker move and still got caught. And I did the July 25 calls. And the beauty in this one was it started coming back for me. I probably could have waited a little bit longer. Like you can see right now, it's trading right there at close to the 25 calls, but I didn't wait quite long enough. I originally sold it for 29 cents, bought it back for 55 cents. So if you were able to hold off on that one, that was much better, but I didn't expect to see the free fall in all of the equities that we're seeing. But it's helping me out, and although I lost money there, getting out a little early, waiting on Apple has helped me. And HES, which is ticker symbol HES, HES Corporations, don't even really know what these guys do, to be quite honest, but I decided, because it was an earnings play, expected to see some volatility come out of it. I went in, sold the July weeklies, sold the 51.5 puts and the 55.5 calls. Like I said, I didn't really know what this company was going to do, or haven't really followed anything that they have been doing, and sold that for 74 cents. So that's why I did this strangles. I didn't really have a market assumption on that. Was able to buy it back for 45 cents this morning. And then on to Twitter, which happy to say positive P&L on the year with Twitter now. Twitter, bearish. These guys can't get out of their own way. They don't have any real management. No way of really monetizing this. I love Twitter. I love it as a platform. But until they really find a way to monetize this and make some money, they just are going to really struggle going forward. And they don't have any forward guidance. Just it's just a great product with no real management and no real foresight as to the future of this company. But having said that, so I went in and sold the July 20 calls because like I said, I was bearish. Sold them for 37 cents, bought them back for 2 cents this morning because I got that directional assumption correct, and it's right down there at the $16 area, $16.20. So those all worked out. Check out Friday's webinar. We're going to be, with all this low volatility, it's like, really, what do we do? I'm waiting for some volatility to expand, so I've got a great strategy that we can use for expanding volatility. With right now, it feels like these equities is like a rubber band wound really tight. I'm just waiting for it to really unwind, and this is going to be great for it because it could spike to the upside or spike to the downside. So we'll be able to take advantage of either direction in this and hopefully make some money with this strategy, with volatility expanding, a big market move coming forward, and it'll be a great strategy to implement into your portfolio, especially in this type of environment. All right, so go to protraderstrategies.com, sign up for that, and if you're not really educated on what volatility can do, check that out because it's really important right now, especially with these earnings trades. All right, if you can't take that, take it easy.